Hi everyone, welcome to this time's Growling Finance. Well, last week was quite peace. Didn't have so many ups and downs. Also, didn't have a clear orientation about where bonds market will go. So, as usual, let's see how bond yield curve changed last week. Alright? The total bond yield curve was more V-type compared to the week before. 3, 5, and 30 years terms increased 5, 1.5, and 4 basis points, and the 10 years term decreased 1 basis points. Furthermore, if we compare it with the one of last December 9th, the total curve was still twisted and flat. 3 years term increased 10 basis points, 5, 10, and 30 years terms decreased 8, 27, 21 basis points. In last week, bond yield spreads between Chinese treasury bonds and corporate bonds kept enlarged, with the spread between 10-year Chinese treasury bonds and commercial bank perpetual bonds enlarged to 62 basis points. About actions of investment agencies, agricultural and commercial banks bought 27 billion long and ultra long-term bonds, whereas funds sold 8.5 billion. So few things happened during last week. Some crucial data came out and the market sentiments went back to fundamentals. Our drama queen Trump kept peace for somehow. So last week was a little quiet, and let's see what happened about the bonds market. In terms of fundamentals, a lot of data came out last week. First, and the most important, the Q1 GDP was 5.4%, better than expected one 5.2% and the target one 5%. The whole picture of economy was good from Q1 view. Second, the economic data. The total retail sales of consumer goods was 5.9% year-on-year, far more better than last one 4%. The industrial added value was 7.7% year-on-year, also better than previous one 5.9%. And the fixed asset investment was 4.2% year-on-year, slightly higher than previous one 4.1%. The consumption data and the production data was stimulated by the key policy, large-scale equipment upgrades and consumer goods trade-in programs, and had a good number in Q1. But long-term effect seems not very positive because of tariffs impact. Third, the financial data. We look at it from credit part and the social financing part and focus on crucial changes. In credit part, loans to enterprises and public institutions was a major incremental part, increased 440 billion yuan to total 3 trillion yuan compared to the same period last year. So we can see that the whole business energy of Q1 was good, according to the data. But household loans hasn't changed much. The effective demand for housing market remained insufficient. In social financing part, the most incremental part was still net financing of government bonds, increased 1.3 trillion to 1.84 trillion yuan March, and net financing of corporate bonds decreased 230 billion to minus 90 billion yuan. Token all, the financial institution in Q1 was positive as expected from a quantitative view, but the structure wasn't that good. Credit demand from corporate and household departments still need to be improved. In addition, Trump administration softened their attitude towards tariffs imposed on China and showed some willingness of making deal. To comprehensively analyze, last week's bonds market hasn't changed much, regardless of good economic data and Trump's attitude. It still waited for a clear sign of losing monetary policy. The buying power is still strong out there. For funding condition, which also hasn't changed much, the financing cost for non-bank agencies was still around 1.8%. In order to hedge the liquidity pressure from the taxation last week, the PBOC totally invested almost 250 billion yuan liquidity, so the funding condition was friendly to bonds market. So what should we focus next week? First, there is an expectation about cutting LPR rates next Monday, which can be seen as a structural monetary policy. So it's hard to say whether it's good for bonds market. Second, there will be 100 billion MLF due next Friday. Let's see what will happen this time. Are there more specific loose monetary policies? About bond investment strategies, the thought is the same as last week generally. We just need some patience, alright, and keep like 30% to 50% of our total bond position. Flatten bond yield curve may be a good choice as a structural strategy, and we should wait for a more clear prospect about the bonds market. So So as always, if you want to know more useful finance information about the Chinese bond market and economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience and strategy, and waiting for you. So bye guys, until next time.